Okay, today is September 16, 2013. Apple is continued to fall today, and let's go back and take a look at what we was basically, sort of alert ourselves to keep an eye on, on the weekend video. Was essentially this level here. We're saying that it might come down and tag this pivot low somewhere around the, 454, 453 area over here. And as you can see, that is actually booked right to it today. And then the other possibility is, come down and fill this gap here. Right now, we're essentially probably looking at a this particular pivot level here, somewhere around the what's that? The 438 area here for that 438, and possibility that it could also come down and maybe tag this particular level here on this particular pivot low, which would be somewhere around the 419 area. And if we could put up the Fibonacci retracement, we could also see some of the level here that we should keep an eye on and see where some of the potential support and resistance here. You can see that this, the 382 is near this gap here. And, right now today it's kind of penetrate right to this 50% retracement. So there's three possible scenario on this Apple price action. One is that it could chop around and just kind of consolidate here between this, 450 to somewhere around this 463 area. Right? And the other one is that it could come back and reclaim get back above the 50-day moving average and possibly move back up here and fill this gap, right? And then get it back up to that 500 level. And the third one is, come continue to come down and retest some of these, these levels here and possibly come down here to fill this gap and get a bigger flush to, flush more people out, more the long out. So essentially, we could look at the bigger the flush, the stronger the bounce, right? So maybe that's what we will get. But that's definitely if we're going to come down and fill this gap, then a lot of people will probably be start talking about this 385 area. And my premises is I still believe that 385 is a low for quite a while until we get that stock repurchase program completed, because I think that program will trigger somewhere around that 400 level there. So I could be wrong, but right now I'm still kind of keeping an eye on that to play out. So that's where some of the possibilities are for Apple in the next coming days, because these the MACD is still fairly negative, and you can see the 20 EMA is kind of rolling over, and the 200-day is still declining. So much with that golden calves thing. Well, anyway, let's take a look at another stock, which is Netflix. Netflix is also took a hit today, and it came down. But we were talking about that, expecting that maybe it would come down to possibly this 618 retracement on the fib to get it down to this near the 20 EMA, and that might be a good pullback for it to bounce us off and then get it back up above this break about this 313, 314 level here. And that will take us up to possibly get up to this 127141 extension up at the the 333 to 343 area. So we're still kind of looking for that possible pullback, to come down to near this particular pivot low here, which is near the the 20 EMA and also this 618 retracement. And finally, for tonight, let's take a look at Facebook. Facebook is also pulling back, and came back down and sold off quite a bit right now. Might come down and tag this 618 on this particular Fibonacci retracement here. Tag this 618 and maybe bounce off this 4160 level, 4170 level here near this 20 EMA. So we kind of keep an eye on that. I do believe that we did see some negative divergence here. So that's kind of tell us, to prepare for some kind of pullback. And right now, maybe this pullback is the, sort of flush out this negative divergence. So we just keep an eye and see how far it could come back down definitely with this big run here, some kind of pullback would be healthy for it to resume or regain some of the buying power to push this up and possibly get up to the the 50 level here. So those are the stock that we're gonna look at tonight, and hopefully tomorrow's trading will be good for you.